Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete. I'm here just to share with you a quick summary of the market situation, global market situation. I'm gonna summarize for you the last data released by the main economies in the world and how this data is affecting actually the prices on the global markets. Let's start sharing the screen and giving to you a clear view of what is going on at the moment. Today is Thursday, 13th of November, the last day of the month, and as you can see, the price seems to be on the biggest equity index in the world, SP 500. The price seems to be making a kind of resistance and even a kind of turn back to the lower levels after 3 weeks rising. It has to be a reason for this, and it's actually the one I was sharing with you this morning freshly on the newsletter. I was just sending to you the compilation of the last 24 hours data affecting the market, the main data, the most important news reported for the last 24 hours. I believe the reason why the market is start to lateralize the prices or even to drop certain levels is because the yesterday United States growth rate was published, and it was showing us a 5.2% of growth rate in the United States, the first economy in the world, which is an amazing result, better than expected. Even Federal Reserve was surprised with these numbers. We read in the past reports few comments from different members of Federal Reserve admitting that they were surprised by the numbers on the economy and the US economy, including the labor force and so on. 3 weeks ago, the market started to rise strongly after a labor market report published by United States was showing us certain weaknesses on the labor market. Finally, as Cascaris, member of Federal Reserve, said, finally those numbers seems to be there, and therefore it was a perfect reason or excuse to announce or understand by the market, which is what the market was reading, that the interest rate hike was over. And since now on to the future, the only thing we could expect it was a decrease or cut in interest rates. Even some analysts were talking about for the first quarter of the next year, United States could cut interest rates. Even the second quarter, that was the speculation. After the numbers presented yesterday, we are one step away from that scenario because the growth rate is still super strong to justify that actions, that interest cuts. We also see yesterday was published the beige book from Federal Reserve, which is this kind of compilation of all comments from different 12 banks that constitute the Federal Reserve bank system. So I was reading that comment. I also share on the social networks. If you want to follow my social networks to keep updated yourself, it is ATFX Slide and Connect. Yesterday I was posting here, attention, the public report presented today by the 12 bankers of the Federal Reserve ends its summary with these words. Most districts, the districts is the banks basically, Florida, Philadelphia, New York and so on. Most districts expect prices to continue rise during or into the coming year, which means like the inflation gonna still there and the inflation probably gonna keep rising, which is something they also mentioned in the past. Even Jerome Powell said the scenario of an inflation rising is not still discarded. Well, this is the scenario. We got many other different news. I mean, I think this is the key point that is twisting the market right now. We got a few different things that I would like to mention to you quickly. You got the results of today, the last 24 hours. We got the PMI, manufacturing PMI index from China dropping below 50, which means contraction in the economy. And it's also interesting because for the last few months, we had been speculating with if the economy of China could actually slowing down or growing less than expected, which is something they have corrected lately in the last few months. With these numbers, we actually see that from the size of services, it's not that bad. It's 50.2, but from the size of manufacturing, it's actually 49.4, which means contraction in the activity, which means that actually the risk of a slowdown in the Chinese economy is still there and is still alive. Actually, the risk from China, based on this and based on the price on production, is even maybe a deflection on the counter of what is going on in West countries. We also got data from Europe. We can see how France, for example, was growing below the expectation and actually go into a negative area, which is minus 0.1% interannual growth rate, as you can see here, in line with what is going on with the German economy too, because German economy is also in negative growth the last few periods, which means the European Union is actually getting into a recession, and I believe that's gonna put certain pressure on the euro, sell pressure obviously, and it's gonna play a good or positive role in favor of the dollar, which has been dropping for the last 3 weeks because of this understanding of end of new interest rate hikes. As you can see also, the dollar index has been growing for the last few hours, probably motivated for these numbers of growth rate in the United States, and also the recession that is happening in Europe, which is less investment in Europe, and all this flow of capital, all this flow of money is moving to United States and therefore to the dollar. Even if you take in consideration how much is paying the 10 years bond in US, comparing with how much is paying the 10 years bond in Germany, which is US is paying 4.32% and Germany is paying 2.44%. So it's almost 50% less returns if you keep your money in euros in European area. We also got certain news about Asia. I have been setting also this morning certain comments. A part of China, we got Japanese production output rise on circuits, autos, reborn. So basically, Japanese factory output rose in October due to the increase in the production of electronic components and vehicles. Japanese ultra output premium, it's month to month, 1%. Bank of Japan policymakers say there will be no near-term policy shift and advise caution to uncertain in overseas economies. This is very interesting point because for the last few months also we have seen, and I have been updating this on these videos, how the Japanese inflation is keep rising and is forcing or pushing to the policymakers in Bank of Japan to take certain decisions regarding the monetary policies, and therefore the chances of change or shift on the monetary policies in Japan are closer than never. And actually the exchange dollar and yen is in one of the highest moments in history. We are facing right now a situation between dollar yen that is in the top record. As you can see also, industrial production, good news from industrial production has dropped the dollar yen after the comments from also from Central Bank of Japan, but the trend is super bullish, and you can see that it's actually rising key levels around 155 yens per dollar, even higher than that. As you can see here, we didn't see this level since the 90s, which is incredible. I think that's all. It's a quick summary. I'm giving you the key points and the last movements of the market. If you want to keep update, again, you can request to join my newsletter. I'm gonna just request me by email and I'm gonna add you on my newsletter. And if you like the content, you can follow also the comments I publish during the day, short comments on the account on X, ATFX Connect. And also, if you like it, just give me a thumb up and subscribe this channel to keep updated on these videos. Take care and good luck with the market. Bye bye.